Hi, this is Jeff from SimpleForexSystem.net. Today is the 29th of May, 2019. Yesterday I sent an email out to my list letting them know that Cynthia Macy has a new product out. It is a currency strength meter. And I mentioned in that email that there was a really kind of a fairly solid and fairly effective way to trade news events that isn't really trading the news, you're really trading the aftermath, but how you could pair that up with that currency meter and and then decide whether or not you wanted to take the trades based upon how the chart's set up in the few minutes after a news release came out. So I got a couple of emails from people that said, thanks for the email, but could you maybe do a video and kind of do a visual explanation because it really wasn't all that clear to them. And of course I understand that a lot of people are more visually oriented than they are in terms of being able to read something and put it together. Sometimes pictures make it a lot easier to understand. So what we're looking at right here is a 5-minute chart for the WTICrude, as crude oil, West Texas Intermediate, what WTI stands for. Most platforms, I think most brokers actually offer this as an option to trade. And let's just take a look at this one because this one has been very, very consistent over the last year or so in terms of the method that I was explaining in the email yesterday. The red, the line running across the top here, this is the candle that closes right before the news is released. In my case, it comes out at 10:30 in the morning on Wednesdays, except during weeks when there is a national holiday on Monday, like there was this week, in which case it will come out tomorrow at 11. But for the previous 4 weeks so far in the month of May, it has come out at 10:30. On Wednesdays. So this is the 10:25 candle that closes. The next candle is the candle where the news is released, and you'll see in the examples that I have here on almost all of them, it's the candle gives you quite a bit of activity. There's a long wick. Price dropped rather dramatically. It came back up, and then the next candle opened. Went well above the opening on the previous candle, but then dropped down and closed below the close of the first candle. Now that brings us to one of our two tradable scenarios. As I mentioned in the email, anytime that you have two candles in a row, these are 5-minute candles, anytime you have two candles in a row that close in the same direction, that's an automatic trade going in that same direction. So here the first candle closed as a sell candle. The second candle, in spite of the fact that it went up rather dramatically, ended up coming down and closing as a sell candle. That's two in a row. You put your sell trade in. Now this happened to close at 63.37. And in fact, if you want to notice over here on this candle, it actually moved up above that a little bit. Not too bad. I don't think it was 63.45, so about 8 cents higher, which is really nothing when you're trading crude oil. But over the next 5, 10, 15, 20 minutes, price moved all the way down to a low of 62.99. So if you got in at 63, whatever we say this was, 37, I think it was, 63.37, and if you actually got out at the very low, and there's no guarantee you would, but you had about 38 cents, 39 cents to play with. Had you waited around, you could have gotten out actually at a much better price about an hour and a half later when price got all the way down to 62.72. So you would have been looking at about 60 cents. When you're trading this with most brokers, if you're trading a mini lot, it's $1 a pip, and if you're trading full lots, it's $10 a pip. So if you're getting a 35-cent move, it basically works out to $35 if you're trading a mini and $350 if you're trading a full lot. Okay, so that was May 1st. So we had two boxes in a row that closed. We take the trade in the same direction. Worked out very well. Let me pause this for a second. I'll move on to the next example, and we'll pick it right back up. Okay, here we are at the second example. This is the 8th of May, the following week. Again, 10:30 in the morning. Again, we're talking about West Texas Intermediate crude, 5-minute chart. Simple candlesticks, no indicators needed. This again, the red line indicates where the candle closed right before the release of the news. So the news came out at 10:30 my time. We had a nice big bullish candle. It closed. The second candle actually was bearish all the way down, but it closed inside the what we call inside the tips, basically, of the wicks. There was no wick on the bottom side here, but it closed inside the first candle. When that happens, all we're doing is we're waiting for price to break either through the top of the wick on that first candle or through the bottom of the wick on the first candle going the other direction. Now in this case, price actually broke through the top. Looks like around 61.89, so around 61.90 would have been your purchase. It did go up immediately. No, sorry, had a little trouble getting my mouse to work here. Went up immediately to 62.06. You picked up 16 cents right off the bat. There was a little bit of a sell-off back here, down about 15 cents or so, upside down, but ultimately it moved up to 62.34, 62.35. And you were in at 90, so you're talking about a 44, 45 cent move. Again, not too bad at all. You would have needed a little bit of patience here. Obviously, you'd have been in this trade for about an hour before you peaked, but this is a very, very common type of price action that is post-news, especially with West Texas Intermediate crude. So let's go on and look now at May the 15th. So here we are on the 15th. Again, red bar demonstrates the candle that closed right before the news was released. News came out, nice bullish candle, second nice bullish candle. You would have bought at the close of that second candle. Price was 61.74 at the close. You can see right here over the next 30 or 40 minutes, it just kept moving up. It got all the way up to 62.45. So about, what, 25 and 45, 60, about 70 cents. $70 for mini lot, $700 for a full lot. So, you know, not too shabby. And I got one more example here to show you, and then we'll wrap this. Okay, 22nd of May. This is the candle that closed before the news came out. You can see we actually even had a gap when the news was released, but we had two bearish candles in a row. The close on this candle was 61.85. You can see, I think, worst case scenario, it went up to like 61.89. So you had like a 4-cent drawdown on this thing, worst case scenario. This was a little bit odd in that it took about 45 minutes for the price action to really kind of pick up and take off. But once it did, it went all the way down to 60.95. So you're talking about getting in at 85, went down to 95. That's like a 90-cent move over the course of about 2 hours. So again, $90 for a mini lot, and $900 for a full lot if you're trading full lots on the WTI crude. So anyway, that's really the scenario. Now in the email, I did mention there is a third scenario, which is, let's say you have one candle that closes, like in this case, this candle closed up, and then the second candle closed, down well past the tips of the first candle. When that happens, I pass on the trade. This doesn't happen very often, and the few times that I've been able to go back and find it happening, there's been no consistency in how price action played out after that occurrence. And so, maybe it'll keep going in the same direction. Maybe it'll turn around and reverse again. It could go either way, honestly. There seemed to be no consistency. So if you get one candle in one direction, a second candle in the other direction, and it goes well past whatever the high or low was of the first candle, just pass on the trade. You're not going to see it very often, so don't worry about it. Most of the time, you're going to see this setup right here, which is price goes, two full 5-minute candles in the same direction. Then you just jump in and pick up whatever you can after that. So anyway, that's how you would trade it. And again, as I mentioned in the letter, one thing you can always do, and it won't necessarily work with the crude because it doesn't show up on the currency meter, but if you're trading the pairs, and you've got Cynthia's currency strength meter, take a look and see where things are at, and make sure that you have one currency, the currency that you're going to essentially be needing to be doing the moving. So if you're selling the pound yen, for instance, you want to make sure the pound is definitely weak and the yen is definitely strong before you jump in. That's a nice little fail-safe to have there. If they're both kind of mired in the middle, in spite of the fact you've had a decent move on the chart itself, yeah, you might want to consider passing the trade because you just don't have that validation that you would get from the currency meter. But I think most of the time when you find over the course of 10 minutes the price has been moving dramatically in one direction, you should get that validation from the currency strength meter as well. But like I said, if it's not there, it's probably a good time to pass on the trade. So it's a nice little backup. Anyway, hope you found this helpful, and drop me a line at jeff@simpleforexsystem.net if you have any questions, and I'll try to get back to you as soon as I can. And we'll be back again soon with another video. Bye-bye for now.